let's take a closer look at Broadcom's first quarter results. Let's get to CFRA Research Senior Equity Analyst Angelo Zino. So Angelo, as I just said, it seems like the read on this is it's reassuring to investors, the numbers beating estimates. Of course, we've had companies like Nvidia beating estimates and the stock not rising. Are you reassured here, and do you think there's some sustainability to this reaction?
Yeah, whether or not there's sustainability here remains to be seen. I think the good thing, at least from Broadcom's perspective, is this company was really kind of beaten down in terms of the shares going into the print. So they had that going for them. The expectations were pretty low. Now that said, when you kind of look at how they performed during the quarter, it was a nice little beat on the revenue side of things. It was even better beat on the earnings side of things. And that's really the story for Broadcom. It's the fact that they continue to improve on the earnings side of things, on the free cash flow trajectory. And we kind of saw that again. When you kind of look at the AI revenue number, I think I saw, just really quick before hopping on, I think it grew about 77% year over year. Our outlook was for 65% growth on a year over year basis. So, clearly what's causing the beat, at least on the top line, is that AI revenue. So that's definitely a positive out there as well.
Angelo, the analyst over at Oppenheimer, led there by Rick Schaefer, he told his clients, Broadcom, he said, is the #2 AI semiconductor franchise after Nvidia. So pretty high praise there. I mean, he's saying Broadcom basically, they take the silver. Is that how you would rank them, Angelo?
Well, I think just based on performance here over the last kind of 2.5 years, whether it be stock performance, whether it be from a fundamental perspective, and when you kind of look at the revenue that this company has generated on the AI side of things over the last 2.5 years, yeah, I would agree with that. I would say kind of Nvidia clearly at the top of the list in terms of kind of the AI revenue potential and even the long-term trajectory of that company. And then when you kind of look at more of a 1A or kind of the silver medal out there, I would agree. Broadcom kind of being that next kind of option out there. And actually, they are the second alternative to Nvidia out there. When you kind of look at the AI ecosystem out there, it's really kind of been GPUs and Nvidia's GPUs that have kind of driven kind of the AI infrastructure market out there. But kind of that second alternative out there has been on the custom silicon side, and that really is Broadcom. And when you specifically look at where Broadcom is tethered to, it would include kind of Alphabet's TPUs out there, as well as kind of what Meta's doing on their end. And when you kind of look at the CapEx spend specifically from those two companies, they are among the most kind of aggressive relative from a 2024 to a 2025 basis.
Angelo, one of the things that sort of took down Nvidia after its numbers was the margin here. So I'm looking at the margin number. It looks like that the company's predicting second quarter adjusted EBITDA margin at about 66%. How does that match up with what you would be expecting from the company?
So we were looking for 66%. So essentially kind of in line with where our expectations are for the company this quarter and in the following quarter out there. So and that's I think the key here too is when you kind of look at Nvidia's revenue. When you look at Broadcom's revenue trajectory here over the next couple of years, what's really going to kind of drive that top line more than anything is going to be that custom silicon business. It does have lower corporate gross margins. But that said, when you kind of see that business start to scale up, it will actually be accretive to the operating margin side of things. So we do expect, at least from an operating margin and adjusted EBITDA perspective, this is a company that will continue to see those margins widen here over time.
Angelo, as you noted, the stock got knocked around heading into this print year to date, although shooting higher here in the after hours. I'm curious how you think valuation looks.
I think valuation looks pretty good here, at least relative to what we've seen over the last couple of years, and given kind of the revenue kind of diversification of this company, right? I mean, you kind of look at how they're comprised here. Over 40% of their revenue is tied to VMware now, and this company continues to perform extremely solid on kind of the software side of things, and they're actually kind of seeing some nice growth on the software side of things. Post kind of VMware, which is something which is kind of a welcoming sign out there for investors out there. So when you kind of look at the valuation, which is kind of compressed all the way down to under 24 times next year's earnings trajectory, and on top of that, the earnings will likely, the earnings expectations are going to go up after these results here. We think the pullback represents a pretty good opportunity for investors, especially long-term investors and investors that may kind of be a little bit skittish about kind of that semiconductor environment right now, it's a good way to kind of hedge yourself a little bit with that VMware exposure and that software exposure.
I'm curious, Angelo, how Broadcom looks to you, especially on the heels of Marvell, which disappointed investors or maybe wasn't as good as people had hoped there. Since they're in similar spaces, do you think that execution-wise, Broadcom is doing something that Marvell is not, for example, or are they just serving different customers? What's going on there?
I think Broadcom's just more solid in nature, to be honest with you. When you kind of look at their overall business out there, you kind of look at the CEO in Hawk 10. I think the street kind of just, overall just kind of just places a lot more confidence in a company like Broadcom. Obviously, Broadcom is a much bigger company out there. They have a ton more levers in terms of kind of improving the earnings trajectory here than other companies out there. And again, this is a company unlike this is a company that, does, I'm sorry, this is a company that has the, the potential to really kind of, touch a number of levers out there. So that's why we do like it. It is different than Marvell in the way that they're kind of similar to each other is the fact that they both are attached to kind of the custom silicon business. But Broadcom is a lot more than that. Clearly they also have that Apple business on the wireless side of things. So there is a lot more that they do out there. And I think just longer term, the investors out there just have a lot more confidence in terms of the visibility of this company relative to maybe a name like Marvell.
Angelo, good to see you. Thank you so much.